Hello everyone and welcome into the channel. My name is Brent and in today's video we are going to be doing our stock market weekly recap for the 13th to the 17th of June 2022. We didn't get our weekly recap done last week, so we're going to go ahead and cover some of the stock information, stock data that has changed since when we last invested. The market has been tumbling down. There's been a lot of red out of the market. And there really hasn't been any bottoming in sight. We had a little bit of a bottom, but that was called the where it kind of tricks you out, the fake out. It's going to go up. Yeah, here's my big ol' fake out, right? Last week, the market fell, continued to fall. There's really no bottom in sight at the moment. A lot of individual investors believe that the market could continue falling another 10 to 12% before we hit maybe any sort of stabilization. So in this video, we're going to go ahead and hit on 4 different areas. Number 1, we're going to go over the overall performance of our portfolio. I like to do these on a week-by-week basis, or at least every 2 weeks here, to kind of go over how our portfolio is handling this market, what's going on, right? During the 2020 crash, our portfolio fell from 24,000 to 14,000. So we got sliced pretty good. Right now, our high was around 43,000. In this video, we did dip below 40,000 now, but it's really not that bad in comparison to where we were back in 2020 as far as percent loss. We started in the green, but we'll go over all of that. Number 2, we're going to go over the activity of the portfolio. What have we been buying? What have we been selling? What dividends have came in? And then number 3, we're going to go over the updated information as far as the dividend information, dividend income of the portfolio. And then we're going to go into number 4. What are we buying this week? I do have one stock in mind that I'm buying. Actually, I have 2 stocks in mind, but I think I'm going to be buying the one. And we'll go over that here towards the very end of the video. It's already a company within my portfolio. And we'll go over what I'm buying here, okay? If you guys have any comments or questions, suggestions for upcoming videos, or anything you would like to see, recorded here, let me know. It's been a lot of fun, both on the M1 Finance and in my Merrill Edge account. Merrill Edge has been a blast this year with so much volatility with the calls and options and stuff. And then crypto here taking a toll down to 21,000. It actually hit about 17,000 before it kind of trailing back up. But anyways, diving into number 1, the overall performance of our portfolio. Now, at a high, we were up 77.7%. Here we are right now. We have a market return of 33.76 since this portfolio was started back on January 8th, 2018. We are still in the green because we can never lose these earned dividends. We can never get these taken away from us. So the earned dividends within this portfolio will always be there for us. The market gain will, that'll be volatile in any market, but the earned dividends that was paid to us, those have been transferred over to shares of companies within the portfolio, and that is awesome. So our market gains remains at 2,586, along with our dividends of earning $3,354. So our total gain so far is nearing $6,000. So it's not bad overall. I forgot what the high was of the portfolio. I think it was on 15,000 as gains, but a lot of that got wiped out with the recent dip. But that is fine. Long term is where we're at, right? Now, our best 3 performers here are Apple, AbbVie, and WP Carey. So WP Carey is one that I haven't seen in quite a while be up in this position. This is a real estate investment trust, so a lot of times these don't really do well with rising interest rates, but for some reason WP Carey does seem to be coming out on top. So kind of interesting right here. I haven't really looked into why. And then our worst performing companies, check out all this red. It has been years in this portfolio since I have had much red. I've had Clorox being red for like months and months and months, but beside that, it has had very, very little red. Now, the positions that I'm really interested in buying right now are JP Morgan and what was the other one? JP Morgan and Waste Management. Right now, I'm holding off on Starbucks at the moment. It's hit my equity threshold of about $2,000. So I'm happy with where that equity is at right now. And IIPR has been getting beat up here in the short term. This is another REIT within the MJ area. So I'm not doing anything else with IIPR at the moment. I'm just kind of letting it sit. It's simmering because it's gone down a lot within this past week, and it could be a good time to buy. But I would rather focus my capital going into the markets, into companies that I believe in long term, such as JP Morgan, one of the biggest, probably is the biggest financial institution, bank out there globally and within the United States. And then we have Waste Management here. This is a solid utility company, has very, consistent customers, right? You have to have your waste picked up and taken away. You're just not going to have it built up. So their business model is very consistent, and I believe in them long term. So I would rather put my money towards JP Morgan and Waste Management, and they are both positions in the red. So right off the bat, letting you guys know what I'm kind of focusing on buying here. Now, number 2, what is our weekly performance? Well, we did take a bit of a dip here. We were doing really well last week. I think we were flat last week, right? We were about down point some percent last week, but this week we took a bit of a hit. This is probably our largest fall in a single week in quite a while. So we are down nearly $2,000 in a week. This actually did break us below that $40,000 limit, down 4.4%. Now, a lot of this, or all of this, a good chunk of this, has to do with IIPR. This is down 16.16%. So again, I probably have to go do a little bit of research here. What happened with IIPR? It has been in quite a bit of a downfall, and this could just be because profit margins and people are a lot more strict, and with interest rates rising because of the sector and area that this is invested in doing business in. They carry on a lot of debt, right? It's a real estate investment trust that's within the MJ industry. So they carry a lot of debt with it, and it gets very expensive. So that could be what's kind of weighing them down right now. So it took a pretty hard hit this past week. Avery Dennison, Lowe's, Waste Management. This is what I'm looking to buy, right? And it's down 7%. That is an awesome 7% discount on a company that I would otherwise want to buy anyways. JP Morgan, another 5.45 discount right there on my buy. Putting it in the red, lower cost basis than where I originally decided to buy it. So that is awesome on both of those. A lot of red out overall. The only positive positions in the portfolio this past week were Siggy and WP Carey. This is an insurance company, and this is a REIT. That was the only green within my portfolio. Now, how did we do in comparison to the main indexes? Well, the S&P 500 only lost 2%. That is amazing. So they lost 2%. My portfolio basically doubled theirs to the downside. Dow Jones lost 2.06. The NASDAQ lost only 0.1%. So NASDAQ could potentially be finding their bottom, right? They're down 30% year to date. The S&P 500 is down 22.9. The Dow Jones is down 17.75. So overall, they could potentially be finding their bottom. I'm not sure where I started this portfolio at the year, because I sold off so much of this. Look at this. I sold off a good chunk around here. I was reconsolidating my portfolio. So it's really hard to tell where we started the year. But I'm saying about 43,000 and some change. And here we are down at 38,000. So I'm not sure. We could do like the change percenter. Hold on, let me go ahead and change. Change percent calculator. Okay, we could bust out this handy dandy website right here. So I can kind of say, we'll just take the high right here, right? I'm just going to take the high right here. January 10th is probably where the majority of my money was at. And this is 43,275 and 07 cents. That's not that one. Yeah, that's fine. And then here, percentage. And now our portfolio sits here at 38,000. So if we take the difference here, we're down roughly 10.94% year to date, potentially, right? potentially right around there. Now we have added money into the portfolio. So if we go into our funding history, we've added roughly $2,553 into this portfolio so far this year. So if we wanted to say we added the money dollar cost averaging pretty much the entirety of the time. But what I can do here is take that amount and subtract that, and I'll actually get about 35,000. 985. So if I didn't add any more equity into the portfolio, we probably wouldn't have been we probably actually would have been right around there. But our total loss would actually be right around 16% to the downside, right? If I removed all the money that I've actually added into my portfolio this year, the portfolio would sit right around $36,000. And that would actually put us at a net loss of around 16.8% year to date, which all in all is not that bad. Our portfolio is handling pretty well. It's all invested in dividend companies. These dividend companies are going into number 3, which we're going to go ahead and cover the activity. So the last time that we made a video was about 2 weeks ago, back on the 6th of June. So as of the 13th here, we have had Avery Dennison pay out a dividend of $7.44. We also had Main Street Capital paying out a monthly dividend of $8.54. We had Realty Income, that's another monthly dividend, paying out $6.78. And then we had Waste Management paying out $5.91. So that's essentially $30 right here being paid out within the last two weeks or so, and that's all being reinvested. We also had Pfizer down here, $12, and Johnson & Johnson, $11.46. So all in all, there's about $50 right there within the past few weeks here. That's all being reinvested into companies that are on their down. They're going down, right? That's just buying back more shares a lot faster. And our portfolio income on this account, we kind of showed it a little bit here. This is all correct as of now. So if I go into my holdings, our value of our current holdings is at $38,538, and our $38,539. So the data in here is all fairly accurate. The portfolio yield on cost is at 3.22%. This portfolio just broke above $1,209 in dividends annually. So we put out that video right here. We broke $1,200 in dividends within our portfolio. So that's a big old pat on the back. This portfolio is just chugging along very nice. And we can see here using Seeking Alpha, this site right here, I kind of have all my holdings within this site. And this is showing me some of the companies that are going ex-dividend here in June, right? So we're on the 21st. The next company going ex-dividend is IIPR. Now, this could actually be a pretty good time to buy IIPR, I suppose. It does have a trailing 12-month yield of 4.36, but right now, we're looking at, if we buy this company right now, we're buying it at a 6.5% starting yield. That is very, very high, right? It only has 4 years of dividend growth, so it is a little bit risky, but you can see their 4-year average payouts. This is a REIT. So the payout ratios are going to be much higher. You'd have to look at funds from operation and how much they pay out, but their dividend growth has been 50.26% over the past few years. Over the past 3 years average. But again, this is a very risky company to be adding money into, thinking that they won't cut their dividend during tough times. We had that happen with Tanger Factory Outlet. I think that's SKT. I think was the company that had been invested in, and they cut their dividend during the 2020 crash. So you really want to focus on companies that have been growing and paying out dividends for the past 10 plus years, right? So we're going to be focusing on buying Waste Management. I don't believe that's what's in here. I haven't added that in here recently. So Waste Management would be the one. And then JP Morgan JP Morgan, oh yeah, it's right here. So JP Morgan's been paying out for the last 9 years. Waste Management over here, if I go to dividends, they've been paying it out for the last 19 years at a very strong growth rate of 8%, and they have a very low payout ratio of 46.75%. But their yield is a little bit lower, right? Their yield is 1.85 versus JP Morgan with a current yield of around 3.54%. So really, JP Morgan is like a really, really good yield right now in comparison to its past history. You know, it's came down really nicely over the last few bits here. And it's definitely one of my main focuses on my next buys. So we're going to go into number 4. What are we buying right now? So you kind of already know what I'm going to be focusing on here. I'm going to be buying JP Morgan. It's in the negative. I'm pretty excited about that. We're going to go ahead and split how much buying power I have here. I have $308.18. Split that up. That's $154.09. We're going to go ahead and put that towards JP Morgan. And we're going to take the remaining $154.09 and we are going to throw it at Waste Management. I'm hoping that I could throw it so hard at Waste Management here that it'll actually flip this company and make it, do a 180 here, turn this company around. But we'll see how this goes. So that is all of our buying power right now. So that is the update of the week. Let me know down in the comment section below. What are you guys buying? What are you guys selling? What are you guys doing in this market? Are you guys pretty excited about anything in particular out there individually? Or if you guys are sticking with REITs, let me know down in the comment section below. Also, another comment for you guys. Bitcoin. Are you guys buying it? Any Ethereum? Any Bitcoin? Are you guys buying any crypto at all? Now, I bought crypto last year to kind of diversify my portfolio out of stocks and real estate. Number one, my number one holding is real estate. My number two holding is stocks, and crypto overall only is 2% of my net worth. But I still wanted to make something where, hey, if Bitcoin blew up, it would be really nice. At a high, it had gained over $10,000 from when I purchased it. But now where it's sitting at, it has lost around $7,000 from my initial investment. I don't even call it an investment. It's more like a speculation. But I'm going to have it invested in there long term. And it's at Voyager. So it is earning interest per month. So I'm in no hurry to sell it. I'm just kind of letting it sit and collecting that interest, reinvesting it into Ethereum, Bitcoin, and Litecoin. So those are the 3 cryptos that I hold over on Voyager. So yeah, that's it. Let me know down in the comment section below. What are you guys doing with your stocks? What are you guys doing with crypto? Are you guys selling real estate, buying more real estate with those 7% interest rates? I would really like to know. So that is it for me. I appreciate everyone tuning in today. Again, if you guys haven't done it, go down below, hit the gray button to subscribe. Don't unsubscribe. Subscribe to the channel, hit the bell here to be notified every time we release a brand new video. And again, drop me a comment, say hello, let me know what you guys are doing in the market. I would highly appreciate it. I will see you guys next time. Bye-bye.